Express Platinum just increased its annual fee to $895, up from $695. So if you're wondering if it's still worth it, keep watching. So they added a $300 credit to Lululemon, split up by $75 every quarter, a $400 Resy restaurant credit, which is $100 back every quarter, and a new $120 Uber One credit and a $200 Aura Ring credit, and the hotel credit was increased from $200 a year to $600 a year. So you're getting about $1,400 to $1,500 of extra credits per year for the $200 increase in the annual fee. Here's a full list now of all the perks and credits you get with this card, and I'd say that the added perks for the annual fee are quite nice, much better than the Chase Sapphire Reserve's annual fee increase and corresponding credits that they did earlier this year. The best part is that existing customers with the Consumer Platinum card will incur the new annual fee after January 2nd. That means you get access to the credits now if you're a customer, and there are only 2 weeks left until the end of this quarter, so make sure to use your $75 and $100 to Resy before September 30th. Don't forget though, you have to click and roll through the dashboard and then just go make those purchases on your Platinum card. Personally, I like this refresh. I already buy Lululemon and sometimes eat at Resy restaurants, but I would love to hear your take. How much money you need to make $100 a month in dividends with Apple stock? Apple right now pays a 0.45% dividend yield. Now, this is on a yearly basis, so we need to multiply our $100 a month by 12 to get $1,200 per year. Then you would divide 1,200 by 0.0045. That's the dividend yield. And when you do that, you realize you need $266,666 worth of Apple stock in order to make $100 a month in dividends, and that's about 1,156 shares. If you enjoy stock market and investing content, Reserve just cut interest rates by 0.25% today, and here's how it's going to affect things like buying a home, buying a car, and your high yield savings account. High yield accounts will go down by 0.25% pretty quickly within this week or next week. So if you're earning 4% APY at a high yield account, you can expect that next week to be 3.75. In terms of buying a house, something that is often not talked about is that mortgage rates are often cut before the Fed even officially lowers the rate, because the mortgage and bond markets are already anticipating the rate cut, and those markets operate in real time. So oftentimes the mortgage rates, they're not going to change that much. For car loans and personal loans, usually you will see those loan rates decreasing in the coming months. It might not be immediate, but it'll happen. Credit card rates will be lowered quite quickly as well, so you can expect if you have a credit card balance that the APRs aren't going to be as high as they were before. But they're maybe 0.25% less. Now, when it comes to the stock market, lower rates means that companies can now basically borrow more money at a lower rate, so they can thus invest in growth, and that's usually good for the stock price. And also more rate cuts coming this year, since there are going to be anticipated 2 more this year, means that there's really no reason to be long-term bearish or negative on the stock market as a whole. But disclaimer, anything can happen. Now, if you want more financial news like this, I come out with a newsletter twice per week. It's completely free. You want to check that out, and also keep following
A lot of millionaires over the years, and here are the 4 traits that I see that overlap the most. Number 1 is that they choose to get rich slow. They don't care if it takes a decade or 2 of consistent investing and saving in order to get rich. They typically ignore the get rich quick type of content on social media because they know that if they stay disciplined and save and invest over time. The second thing I notice is that they are generally optimistic. A lot of them have the confidence that even though they might run into a problem along their journey, they'll be able to fix and solve that problem. They like to lean on the brighter side of things and view failures as learning experiences. Number 3, they live below their means. Even if they are making a lot, they aren't overspending and succumbing to lifestyle inflation. So they might buy something nice for themselves, like a nice watch, but they aren't spending everything that they make. A good example of this is that one of my friends has a commission-based job in real estate, and some months he might make $20,000 in a single month, but he's disciplined enough to know that the next big paycheck might not come for a while, so he has to be diligent in saving and not just buying a fancy watch just because he can that month. And the 4th trait that I notice is that they are always looking to learn from somebody. They're generally curious about the world, and you can bet that they have a mentor that they look up to that can challenge them and keep them growing.